Hello everyone, my name is Ayush Khanna and you are watching Arjun Ayush Khanna classes. So welcome back to my channel. In this video, I'm going to start with part 2 of CA Intermediate New Course RTP of Advanced Accounts. Okay, let's start. For intermediate course, revision test papers, November 19th. Yeah, here it is. Our question number 1, question number 2, question number 3, and question number 4 were completed. So let's start with question number 5. In this lecture, I'm going to cover question number 5 and question number 6 only why because these both are lengthy questions. Okay, so let's start firstly with question number 5. So the question is of amalgamation. Question is of amalgamation. Let's start. It's a similar balance sheet of A Limited as on 31st March 2019. B Limited agrees to absorb A Limited on the following terms and conditions. B Limited would take over all the assets except the bank balance and patent at their book values less 10%, except bank balance and in patents. That means they're not interested in their bank balance. Okay. Goodwill is to be valued at 4% at 4 years purchase of super profits, assuming that the nominal rate of return be 8% on the combined amount of share capital and general reserve. So, focus on the NR is 8% on the combined amount of share capital and general reserve. That means 8% of 8 lakhs plus 80,000. That is 8 lakh 80,000 into 8%. Be limited is to take over the trade payables at the book value. Okay. The purchase consideration is to be paid in cash to the extent of rupees 6 lakhs and the balance in fully paid up equity shares of rupees 100 each at rupees 125 per share. Its premium is of 25 rupees. Whatsoever the purchase consideration shall be from within that, rupees 6 lakhs would be the paid in cash and the rest in equity shares. The average profit is 1,24,400. Okay. The liquidation expenses amounted to 16,000. B Limited sold prior to 31st March 2018 goods costing. Yeah, important point. Goods costing rupees 1,20,000 to A Limited for 1,600 rupees 1 lakh. The B Limited sold certain goods of rupees 1,20,000 to A Limited at a profit of rupees 40,000. Okay. Rupees 1 lakh worth goods are still lying in inventory of A Limited on 31st March 2018. But trade payables of A Limited include 40,000 still due to B Limited. Okay. So let's compare the balance sheet of B Limited. Yeah. Let's start with question number 5. First part, calculation of purchase consideration. See, firstly we are going to calculate the purchase consideration. Okay. Firstly, building 3,06,000. Now you can just look for the amount. 3,40,000 minus 10%. Okay, 3,06,000. Then I hope the question is before you. Machinery 5,76,000. Inventory 1,98,000. Trade receivables 2,60,000 minus 26,000. The 10%. That is 2,34,000. Less. Oh, sorry, the goodwill is left, I suppose. Yeah, goodwill. Therefore, point number two. See, we are gonna calculate the goodwill of the firm. Calculation of goodwill. Average profits minus normal profits is our super profits. You know the formula. Okay. Average profits 1,24,000 minus 8% of 8,80,000. This comes out to be 70,400 and total comes out to be 54,000. So this is 1,54,400. 54,000. Value of goodwill. 4 years purchase. So 54,000 into 4. 2,16,000 is the value of goodwill. Okay. 2,60,000 less trade payables. 3,20,000. 12,10,000 is the purchase consideration. The spaces means so I'm counting somewhere else. Okay, you know the purchase consideration is 12,10,000. Out of this, cash payment is there. How much? Rupees 1 lakh, I suppose. So rupees 6 lakhs. 6,10,000 is the equity shares. Okay, then number of equity shares. How many are issued? Just note it down. 6,10,000 divided by 125. It comes out to be 4,880 and equity share capital is 4,880 into 100. That comes out to be 48 sorry 4,88,000. Okay, equity share capital. Now this is our purchase consideration full. So in this question I'm just going to tell you the journal entries. Okay, that will be easy. uh, and though the accounts are also very easy to make. You have to make realization account, and on the you have to transfer all the assets and liabilities on the book value. Then by B limited the purchase consideration. Then the balancing amount would go. would be transferred to equity shareholders account. Okay, you have to prepare then next bank account. Then third is equity shares in B Limited. Fourth is B Limited, and last is equity shareholders account. Okay, so journal entries. They have they asked him entries? No, I think you can make by yourself. Yeah, but one point I have to explain the valuation of inventory. The main thing, the unrealized profit on inventory. See, the value of inventory with A limited is rupees 1 lakh. That is included. So 40,000. That is 1.60 lakhs minus 1.20 lakhs equals to 40,000 divided by 1,60,000 into rupees 1 lakh. This is the unrealized profit on this inventory. Okay, if you compute this, comes out to be rupees 25,000, one fourth of 1 lakh. As you know that the B Limited has purchased assets of A Limited at a price which is 10% less than the book value. That is, 10% need to be adjusted from the inventory. Okay, inventory 1 lakh into 10%. It will be subtracted from here, and you have to subtract it from both reserves and surplus and the stock. Okay, I hope you got it. Now, next question. Let's start with the internal reconstruction question. Question number 6. Yeah. Platinum Limited has decided to reconstruct the balance sheet since it has accumulated huge losses. The following is a draft balance sheet of the company as on 31st March 2019 before reconstruction. Okay, this is the balance sheet. Next point. Following is the interest of Mr. Shiv and Mr. Ganesh in the Platinum Limited. They both have 8% and 12% of interest of is 3 lakh, 1 lakh, 4 lakh, 2 lakhs. Okay. The following scheme of internal reconstruction was framed and implemented as approved by the court and the concerned parties. Uncalled capital to be called up in full and then all the shares to be converted into equity shares of rupees 40 each. So let's start with the question. Say rupees 10 would be called from here. So its entry would be simple. Question number 6. In the books of companies ODA journal, first bank account debited to equity share capital rupees 1 lakh into rupees 10, that is 10 lakhs. Second entry would be equity share capital account debited. This is of rupees 50. I'll just tell you the logic of these entries. Equity share capital rupees 40 and to capital reduction rupees 10, the balance amount. It is of 75 lakh or 25 lakh sorry, 25 lakh this, and this 40 lakhs plus 10 lakhs, 50 lakhs, 75 lakh is the total here. If 75 lakh is of 50, then how much of 40? Rupees 60 lakhs and rupees 15 lakhs here. Okay, see, the liability of the company, a type of liability of the company is reduced. Okay, the liability, firstly, the liability we have to cancel. The liability is always credit, so we'll debit rupees 50, then credit rupees 40, and the balance profit would be going to capital reduction. Okay, third point, third entry. It says the existing shareholders agree to subscribe in cash, fully paid up equity shares of rupees 40 each for rupees 12 lakh 50,000. Okay, so third entry would be simple bank account debited to equity share capital 12 lakh 50,000. Takeables are given option to accept uh, sh- fully paid equity shares of rupees 40 each for the amount due to them, or to accept 70% of the amount due to them in cash and in full settlement of the claim. Takeables among the same. They were given the option to either convert their amount to equity shares or convert them to convert them to cash, out of which only 70% will be refunded. Okay, 70% will be refunded. They said that the deliverables for 750,000 accept equity shares, and the rest of them opted for cash towards full finance settlement. Okay, now how much was the amount for trade payables? 12 lakh 40,000. Just look here. Trade payables debited, account debited 12 lakh 40,000. Yeah. 2. Bank account, 2. Equity share capital account, 2. Capital reduction. They said that 12 lakh, that 7 lakh 50,000 accepted equity shares. Yeah, 7 lakh 50,000 here. Then here, what would be the amount here? See, 12, sorry, 12 lakh 40,000 minus 7 lakh 50,000 into 30%. The amount would be, sorry, not 30%, it's 70%. My mistake. 3 lakh 40,000 here, and the balance 1 lakh 47,000 here. Okay, I hope you got this entry. Fifth, it says Mr. Ganesh agrees to cancel debentures amounting to rupees 50,000 out of the total debentures due to him, and agree to accept 15% debentures for the, sorry, firstly of Mr. Schiff. The one was left. Mr. Schiff agreed to cancel debentures amounting to rupees 2 lakhs out of the debentures due to him, and agreed to accept 15% debentures for the balance amount due. He always agrees to subscribe. He also agrees to subscribe for the 15% debentures in cash amounting to rupees 1 lakh. Okay, now there is no outstanding debentures interest. So that means in entry will also not show in debenture interest. Okay, uh, I'll be passing the net entry. I also advise you that in exam, if this question is asked, then you should also pass the net entry, not two entries, as it will save your time because you have to write the narrations also. Mr. Schiff, 8% debentures, account debited, 12% debentures account debited. He also agrees to subscribe for the 15% debentures. Okay. Uh, see, uh, the amount here is 3 lakhs and 4 lakhs. 3 lakhs and 4 lakhs. 2 capital reduction account, 2 lakhs. 2 15% debentures account, 15 lakhs. Sorry, 5 lakhs. This is the entry. Then next entry would be bank account debited to 15% debentures. Why this? Because of this. Rupees 1 lakh. Seventh entry. Mr. Ganesh, 50,000 capital reduction and 15% debentures. 1 lakh and 3 lakh is his amount. 8% debentures account debited. 1 lakh. 12% debentures account debited. 2 lakhs to capital reduction. 50,000 to 15% debentures. The bank's amount. 2 lakh 50,000. Eighth entry. Now, land and building to be revalued at 51 lakhs 84,000. 51 lakhs 84,000. 42 lakhs 70,000 minus 51 lakhs 84,000. 9 lakh 14,000. I hope you can now make the rest entries. If there is any increase in the value of asset, then it will be considered as a profit. So uh, it will be two capital reduction, and in case uh, sorry, in case there is any loss in any asset, you have to do it by capital reduction. Wait, I'll just do it for you. Uh, and any other amount, 7,20,000 machinery. I hope बाकी सारे तो छोटी हैं. Yeah, I'll just make the entry for you. Land and building account debited to capital reduction being upward revaluation made, and Yet another entry. Ninth, capital reduction account debited to machinery account to computer account to इन्वेंट्रीज आई थिंक इन्वेंट्रीज का भी अमाउंट बढ़ रहा है 3.5 लाख रुपये इधर है in the previous entry add here inventories 30,000 total here would be 9,44,000 okay this is nothing okay I hope you got it to computers and the rest is to trade receivables to goodwill and to profit and loss account 33,41,000 is the total for here 1,30,000 1,20,000 or 1,09,000 22 lakhs sorry machinery 1,30,000 computer yeah this is 1,09,000 goodwill 22 lakhs and this is 7,82,000 okay so one more entry would be there that is of capital reduction to capital reserve account the balance if there is amount given here no amount is given here of capital reserve so the amount here given is here so the balance amount would go here 5 lakh whenever if you make the account of capital reduction the full account would be tallied and no balancing figure would be there cash account yes you have to make balance sheet yes you have to make so thank you buddy I hope you enjoyed the lecture